Hello, Cheernauts, and welcome to this daily market commentary for Wednesday, the 19th of June, 2019. The big day has arrived with the results of the Federal Reserve meeting and the subsequent press conference. Big day. So what does this mean for crypto? Well, probably not a whole lot, other than attention being taken away from the digital asset market for a few hours. The crypto day started very, very quietly with Bitcoin unmoved around the 9100 area, and Ether similarly static around the 267 level. As mentioned yesterday, much of the focus in the crypto world at the moment is on Facebook's new crypto coin known as Libra. While there was a lot of excitement around the whole concept, it would seem the US House Financial Services Committee has some other ideas. The chair of the committee late yesterday asked Facebook to suspend its work on Libra pending investigation into its usage, security, and overall regulatory oversight. Now, obviously, being Facebook, this project is attracting a lot of attention, but in the bigger picture, any regulatory hurdles that might be put in place could have broader consequences for the crypto world. So it's going to be very interesting to see how this plays out. And just as an aside, at the press conference held by Chairman Powell after the Fed announced the results of the meeting, he was actually asked directly if there had been any conversations between the Federal Reserve and Facebook, and he confirmed that there had been, although he didn't go into any details around the nature of the conversation. But obviously, Facebook had been now reaching out to monetary authorities, probably not just here, but globally, one would imagine. So going to be interesting to see how that one plays out, and whether they, if there's going to be any regulatory oversight on what they're doing, and what that will mean for the broader crypto market. But for today, crypto was sidelined. We pretty much closed where we opened on the day, and we'll see how that progresses during the week. As for FX and equity markets, quiet start after yesterday's volatility. There were some pockets of activity. Sterling was the main exception, running from 125.50 up to 126.30. More of that probably pertaining to the current leadership contest for the Conservative Party in the UK, which looks like Boris Johnson is leading by a fairly wide margin at the moment, and whoever wins that leadership contest will automatically become Prime Minister until the next election as well. So it's a big deal, and I think that's probably affecting sterling more than anything else on that particular move. Dollar Swiss also corrected some of yesterday's move, slipping down to 99.50 from 100.10, and dollar CAD also slipped back to 133.80 from 134.20. Otherwise, major markets seem pretty happy to sit tight and wait till 2 p.m. to find out what the result of the Fed meeting was. That included equity markets that were pretty much unchanged in the US going into the 2 o'clock hour. So what happened? Well, as expected, the Federal Reserve did not cut interest rates, but they did alter the language of their statement, and they highlighted some increases in economic uncertainties, as well as current conditions. The dot plot graph which they issue, which is based upon the thoughts of the various voting members as to their views on interest rates movements for the rest of the year, pointed fairly strongly to a rate cut in July, and potentially another one before the end of the year. But Chairman Powell was at pains to point out in his news conference that the Fed is watching near-term developments very carefully, and I think for that we can read the current trade war between the US and China and any developments we may get at the G20 meeting. He also pointed out there was little appetite to cut rates at this meeting. I think only one voting member dissented and wanted an immediate rate cut. So in short, the market kind of got what it was looking for. It was looking for the change in language. It was looking for some guidance towards some rate cuts by the end of the year, certainly for next month, and potentially another one for the end of the year. It really got all that, and most of that was really priced in. So the market wasn't disappointed, but at the same time, there wasn't anything particularly extra there for the market to get its teeth stuck into. So we did see an overall weakening in the dollar, some more weakening against certain currencies than others. Equity markets rallied a little. At the end of the day, I think the Dow closed up probably just shy of about 40 points, which is obviously quite a bit less than we've seen in a couple of the rallies we've seen in the past few days. Gold ended up trading higher, ended up trading up to high for around about 1358, and obviously the bond markets, they received the news as you would kind of expect, with bonds rallying and US yields heading low, with the US 10-year yield going down to around about 203. Specifically on the FX side, dollar yen went through 108 down to a low 107.90. I think it was around the low, and dollar CAD continued its correction. Started earlier in the morning, moving down to 132.80. Euro, sterling, and Aussie all edged marginally higher. So, pretty much I think as the market had expected, and now we kind of sit tight to wait and see what happens between now and the next meeting. As I said, the Chairman Powell did go to great lengths to point out where they will be watching any short-term developments very, very carefully. So, any new data coming out that's going to be released, we'll obviously have a new non-farm payroll data before the next Fed meeting. Anything on wage growth, inflation, and obviously the G20 meeting, and any trade issues will be observed very carefully by the Fed. There is obviously the opportunity here that we could get a trade agreement between US and China, which will be viewed as a major positive, and that could well negate the need for a rate cut in July. But that's for the Fed to decide, not me. So moving on to the technical picture. So I put up a chart here of the DXY, which I actually put up the other day. It's the dollar index, but I think seeing the move we got today and the focus on interest rates at the moment is good. I just wanted to put it back up again. Today was obviously a major day on the old economic calendar, and maybe the build-up to it was probably a little more exciting than the actual event. However, we did see the dollars weaken, and equities edge a little bit higher. So, looking at this chart, this is a daily chart, and you can see once again, just refreshing your memory, going back over a year. We've moved off these lows here around around 89, I guess, and then over the past since September last year, I guess, we've had a very strong line of support here. Trend line, which has held very well, which held again most recently at the beginning of June, coincided also with the 200-day moving average. So you can see this last candle here, which obviously is today. We've seen this move down, which not completely unexpected given the events, but it will be interesting to watch this chart going forward, because we had yesterday's comments from Mario Draghi from the ECB. They're obviously looking at potentially adding stimulus in the European Union, which is effectively cutting rates. And if you look at the majority of the G20 central banks, not too many looking to raise rates out there. So even with the US cutting rates, it doesn't necessarily mean that the dollar's going to head lower. It will be interesting to see how this plays out. So keep a very close eye on this line of support going forward, and see how the market interprets things and what effect that really has on the dollar. And that's really about it for today. I hope you all had a successful day trading, and we look forward to talking to you tomorrow. Cheers.